Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for Friday, January 31st, 2025. Well, the last trading day of January, and my goodness, we've had a relentlessly bullish market move in anticipation of these reports from big tech. The bullish moves have been just truly remarkable, and in spite of some economic data that hasn't been that great. So looks like we're going to finish out the month with another gap up and a push to the upside, trying to break out potentially the Dow, and maybe the SPY can get back up there as well. We'll have to wait and see. So let's take a look at what happened overnight. First off, we had Asian markets last night, mostly higher. We had Australia up 0.45%. The Nikkei was up just slightly last night. South Korea was lower. India was had the best, up 1.11%. while Hong Kong and Shanghai were still closed for the lunar holiday. If we take a look at European markets this morning, well, we've got European markets moving higher here once again today. We've got the DAX up 0.25%, the FTSE is up 0.35%, and the CAC is up 0.50%. And U.S. futures, well, they're zooming this morning as well, even after, well, a rather disappointing earnings report on Apple. We're going to pump it on higher anyway. We've got the Dow futures up 150 points at the moment. The S&P 500 futures gapping 28.25 this morning, and the NASDAQ futures gapping 176 points this morning. So we'll have to keep an eye on that. Let's take a look at some of the other details here in the market. First off, if we take a look at oil, XLE, we got XLE just a little bit on the flat side here this morning as we take a look at oil, and oil futures right now down 27.5 cents at 72.45 a barrel. Brent crude also lower at 76.56 a barrel, and natural gas is showing a tiny little increase of 2 cents, and that's not really being reflected at the moment in the pre-market on UNG, so keep an eye on that. We had one heck of a move in gold yesterday. Gold pushing up to new record highs, and this morning we've got gold just pulling back a tiny little bit, right now down $3.30 an ounce. Silver, however, is following through to the upside, up 16 cents, continuing to push higher here in the market. It's if gold or silver precious metals sees something, because gold and silver is more of a safety play in the market, sees something in the market that the rest of the market doesn't see, apparently, because we are so zoom bullish here in the overall market. Copper's just a little bit lower today. We've got platinum higher, and palladium also getting a nice little push up this morning after a bit of a pop and drop yesterday. So let's take a look at cryptos here this morning. Crypto markets, we've got Bitcoin at the moment down $734 a coin. And we've got Ether is up $77 a coin, and some mix in those cryptos here this morning. Some fluctuation could be due to the fact that the dollar futures are moving higher here this morning. continuing to press up right now. The dollar is up 52 cents this morning, and we've got bond yields maybe creeping just a tiny little bit higher. 2-year bonds at 420, the 10-year bonds at 452, and the 30-year bonds at 477. So we'll want to be keeping an eye on those bond yields here this morning as well. So what does all that mean for the day? Well, how about we settle in? Buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's take a look at these charts. Try to pick a little bit of information out of these charts and shake off that bias and really look at the charts for what they are, not for what we would like them to be. Well, as you can see right here in the diamonds with this big push this morning and the potential gap to the upside, I look for the opportunity that the diamonds could push right on up into here, test that all-time high, and maybe even break that all-time high. We are relentlessly pushing here. Notice there really has been nothing of a pullback in so long here in the diamonds, as it is just press and pump and pre-market gap and press and pump to the upside. So watch that carefully. I think there's every reason to believe new record highs are on the way, possibly today. If we happen to have some kind of bearish inspiration here on the day, well, what we've done mostly this week in any bearish data, we just ignored it and kept pushing up. So if we do get any bearishness, we'll see if we can push back, maybe fill today's gap in there first, and then we'll start looking back down in here in this area of price support. Beyond that, probably raise a little bit of concern if those bears get something going. We may have to wait until next week for that, with the inclusion of the likely tariffs for China and Mexico. We saw with just another comment about it yesterday from the president, we were up 260 points or something in the Dow and quickly fell, gave it all up in just a few minutes, went negative, and then rebounded back when it found out that the story was just him talking about doing it, not actually doing it. So be prepared next week for some significant volatility from this elevation that we have in the Dow. If we take a look at our SPY, our SPY, stretching on through to the upside, got to admit this is a very bullish setup here, and really pushing in. We may be able to break out of this resistance here today, and if we can break out of that resistance, I have a reason to believe we can push right on up here and see if we can tag those all-time highs in the SPY. Seems like that's what the push is for, as we want to get the headlines out here and finish up the first month in a very, very bullish way, no matter what we have going on anywhere else. So watch that closely as we push on up. Now, if those bears find any inspiration today, maybe pushing back down, we might fill this gap in here on that move back down, and then we'll start testing some of these support levels here, start working our way back down if those bears have anything to say. Now, this would really start to raise some concern, and I really don't think that's going to happen today to push that far down. I think we're going to need something next week, maybe those tariffs or something like that, that could reverse us here and give the market a little bit of rest. If we take a look at our QQQ, also continuing to stretch back up. Now, Q's got a lot more work here to do, and they seem to kind of, well, we might be getting a little bit of a rotation out of some of the big tech high flyers here. Some of these earnings reports have not been great, even though we've tried really hard to ignore them and keep that pump going to the upside. Now, you do want to keep in mind that the blackout period that we've been in is starting to as companies report, they can start going back to corporate buybacks. And with the big techs, they are some of the biggest corporate buyback activity stocks out there. So kind of keep in mind as we kind of transition here, we could see big corporate buybacks coming back into these tech sector, and that could help as well, keep things moving to the upside. If the bulls can continue to push here this morning, you notice that we're breaking through in the pre-market, trying to break through this resistance, and I think maybe pushing right on back up to fill that big gap down when we heard about DeepSeek. And then if we can push on through that area, straight on up here into this resistance in the chart, and then of course we'll have to see if we've got something special here to maybe get us up through the QQQ. And what I'm seeing in those big tech earnings reports, we don't have enough of that special at the moment to push us up through there. But I've been surprised before. And if we get any bearish activity, maybe a push back down to fill that gap. On the gap up here this morning, and then we'll start working our way back down. If we were to really get a big ugly push back to the downside in here, back down into this region, I think that would raise some significant concern in the market. And once again, might have to wait till next week to see if those bears are going to show up at all. And then if we look at our Russell IWM, very similar situation. We made an attempt to pop my alert yesterday, and this is a very, very bullish pattern setting up here in the Russell. Unfortunately, when we've got all of this pump going on into the other sectors of the market, we just seem to lack the momentum and the money to push IWM to the upside. So keep an eye on that. We've got a nice little upside trend, little bullish hold of support in here, kind of coming out here toward that trending area. Watch that carefully. If we can get something going, if we actually get some selling in some of the tech sector, I think we have an opportunity for IWM to be the beneficiary of that. So watch carefully here. Remember, the Russell is still way behind the rest of the market. We've not made new record highs. We've got a long ways, a lot of work here to do in IWM. Let's take a look at our VIX. Now, our VIX yesterday had a little bit of whipsaw in it because we had a little whipsaw in the market yesterday after we heard about those tariffs. It did push down. We haven't quite completely filled that gap, but we came really, really close to filling that DeepSeek gap here in the market. So easing up on that pressure, you'll notice in here we're just below 16 handles. We're at 1584 on that, and volatility here in the market. So watch that carefully. If those bears have anything to say, we might see that push back up. But with the gap up that we're getting this morning, I would suggest we're likely going to fill this gap and then some, maybe even break below this area of support in that chart with that bullish gap this morning. If we take a look at our T20s, our T2122 with this gap up this morning, I had mentioned yesterday that possibility in that push up that we might end up seeing a pushback because we'd relieve so much pressure here that we might see that push back up on any bullish data. And we did get that big push yesterday, pushing right back up here to the bearish reversal zone with the gap up that we're looking at this morning. I'm going to suggest we're probably going to be about pinned to the ceiling here in T2122 with those valuations being really high. So watch that carefully. Now, if the bears were to somehow come up with something in the data today that they are going to react to negatively, well, just keep in mind we've got a very big downside opportunity. And one of the things you will want to notice here in T2122, we can linger up here for periods of time, we can fight and dance up here, but we always find a way to relieve that pressure to the downside here eventually. So watch that carefully. We've been pretty extended here, and I will be watching probably next week for that possibility of a pullback. If we take a look at our T2108, T2108 made that move yesterday and pushed through. We've got just above 50% of the stocks above their 40-day moving average. So with all of this push and stretch and push to the upside, we made that happen. So just a slight few stocks percentage more above that 50-day moving average, giving those bulls some nice relief in here, getting that back up here. Notice we're going to be coming up into this downtrend, and the gap up this morning could easily put us up in there or even above that area in T2108. So keep an eye on that. That is good sign for the bulls. The bulls are clearly in control here in the market. If we see any bearish activity, well, we've got some support levels down here that could test, and of course maybe even the 50% area could hold that indicator up. So watch that carefully. And T2107, well, it didn't perform quite as well yesterday. It ended up pushing up, didn't quite make it up through 50%. So percentage of stocks above the 200, we're just a little bit lacking there, but I'm guessing the gap up this morning is going to take care of that and push us up above 50%. So watch that carefully. We do have some resistance in this chart just above, so watch those areas up there carefully. And then our T2101, well, T2101, the breadth of the market continued to decline yesterday. You probably saw that in volumes. Volumes have been weakening pretty much all week, and as you can see, T2101 pulling back, maybe showing us this little hook in here. And that hook could mean we've got a little bit of pressure maybe building in here for a big pop in absolute breadth. So we'll want to watch that. Now the question will be, will that pop on breadth be bullish or will it be bearish? Watch that carefully for that possibility either way. But with a little bit of hook in here, we might get, again, as we're sliding out of that blackout period, we might get a little bit more market breadth coming in with some of those corporates. Let's take a look at our economic calendar here. And, you know, our economic calendar, something I do want to talk about here on our economic calendar today is the things that, concern me here in the market. When we take a look at some of the data from this week, I want to give you just a clue about how much the market is ignoring right now with this pump to the upside, and that's maybe why we've got gold surging the way it is right now. Take a look right here. We had durable goods numbers. Our durable goods were less than expected, substantially less than expected on durable goods. We had Case-Shiller prices where those home prices went up, continuing to show that inflationary pressure in those home prices. Our consumer confidence declined, not went up. Our consumer confidence declined on Tuesday. Our international trading goods was a whopper in here at $122 billion in deficit on our international trade. Ignoring that, we had no particular worry about the fact that the Fed did not raise or reduce rates. No concern there on that. We had a little bit of fluctuation in price for a tiny little bit and then right back up. Our GDP came in substantially lower, showing our economy is slowing. Nobody cared. We continued to pump to the upside. So all of these data points in here showing us that, hey, we may be weakening here, but the market is ignoring it. And that sets up a pretty dangerous situation, particularly for retail traders that may be feeling that fear of missing out and chasing this run to the upside. I would like to submit to everyone to be really careful. Make sure you have your stop losses set. It's perfectly fine to trade bullish stocks, perfectly fine to feel the excitement here, but make sure you have your stop set. Make sure you're not over trading this market, particularly in just a very centric area like the tech giants, because if this does reverse, I worry that a lot of folks could get hurt pretty substantially in that pullback. So watch that carefully. Remember, our valuations are extremely high in the S&P 500. So this morning, we're going to get a personal incomes and outlays number, and what they're suggesting right now, even with the gap up here in the pre-market, they're suggesting that we are seeing some increase. Personal income up to 4, personal expenditures going up from a 0.4 to a 0.5. The PCE month over month increasing from 1.1 to a 0.3, the year over year increasing from a 0.4 to a 2.6. Here we've got the core PCE index month over month. They're suggesting that's going to increase from a 0.1 to a 0.2, and somehow with all of these things increasing, they're suggesting this is going to remain flat on the year over year. So kind of keep those things in mind. Again, we could ignore this at least for a period of time. That's what the market is seeing. We might get a little bit of reaction if this number comes in hot. Don't be too surprised if suddenly we care. Some point in time we will suddenly care if some of these numbers are bad. Now, of course, if these numbers come in better than this, zoom, we may just really tear it up to the upside. But I think we have an all courts press here trying to push things back up into some new record highs, getting those headlines, trying to draw additional money into the market. I would just be really careful because we have seen a lot of data that hasn't been all that favorable for the market, and the market has just absolutely ignored that. So watch that carefully. After that, we've got an employment cost index. Employment cost index, they're looking for that to increase. Our employment costs going up to 0.9 from 0.8, so keep an eye on that. Again, possibly inflationary. We've got Michelle Bauman speaking here today. Chicago PMI, our PMI expected to increase to a 4.0. Remember, anything below 50 is still showing that PMI in contraction, but this would be a nice little improvement if we can get a 40 reading on that. We've got a Baker Hughes rig count, and we've got some farm prices here in the market to pay attention to. So let's take a look at some stocks. First, let's take a look at our earnings calendar here for today. Our earnings calendar, we do have quite a few earnings for this morning to be paying attention to. There's no notables here for this afternoon. So I'm going to run through these quick. There's not too many here today, so I'm just going to run straight through them. We got ABBV that we'll be reporting this morning, AON, ARCB, ALV is in there, BMI will be reporting, BAH. We're going to hear from BR. We've got Charter Communications. We've got Chevron in there. We've got Church & Dwight that will be reporting. We've got a Colgate-Palmolive, ETN, ExxonMobil, FHB is in there. We've got Franklin Resources. GNTX is on that list. Let me scroll my list here just a little bit. We've got Granger in there, IMO, JJHG, LYB, OMF, PSX, RBC, VSTS, and WT. Those are our notable reports for this morning, so we will want to keep an eye on those. Could provide some bullish or bearish activity in here for the day. You will notice that we don't have the big heavy hitters here today, but things like Chevron, ExxonMobil, things like that, Phillips 66, they do have the potential to move the market here, so keep a close eye on those. So with that, how about we take a look at some stocks that could be setting up for today? But before we do that, everyone, if you could do me that quick favor, Like I've asked all week, if this is the first time you've seen these videos, please click that subscribe button on YouTube and also click the bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, click that thumbs up button, leave a brief comment. That helps the channel to grow. I apologize yesterday. I didn't get a chance to answer those comments. I ended up with a little bit of a computer problem, which put me behind, and I wasn't able to get to those, so I apologize. I should be back on that task here this morning. Thank you so much to everyone who does do that. It means an awful lot to me, and I truly appreciate it. So thank you. Let's take a look at some of these stocks setting up. Remember, everyone, these aren't recommendations to buy or sell any security. You need to do your own due diligence and be very careful in this market. You know, one of the things I've been cautioning folks in Right Way Options, just go ahead and trade long, just don't over trade long. If we happen to get that big ugly pushback for some reason in the market, you could have a lot of positions stop out all at once, and those can be really painful days. I've got some experience at that. Even when the real nasty t-shirt, got a whole closet full of those nasty t-shirts and making those kind of mistakes. So be really careful. If you take a look at in here, Manpower, this is a nice little pattern. Now it's getting a little pop and drop here in the pre-market, and that's because it is on that list for reporting today. So be really careful here until we get that report underway. Maybe this holds in this pattern, maybe it doesn't. But I like the potential setup in here. We've got this little bit of inverted head and shoulders pattern, our neckline straight up through here. So if we can find that energy in here and pop that out, yeah, worth keeping an eye on. And we're in that rounded bottom breakout pattern just above the 50-day moving average, so I think it's worth taking a peek at. I picked up a tiny share position in this on TIGR. Nice little bullish pattern starting to show up here, and this doesn't report until 3/19, so I've got plenty of time potentially on this for that move to the upside. I would watch that carefully in here. If we can get any follow through in here today, then there may be a little bit of a push in here. And again, I just picked up a small share position. I didn't like the options at all, so I don't have a lot of risk on this, and I'm just kind of waiting for the next entry into the trade, with keeping that on my radar list. Upstart tried all day long yesterday. We popped up, we were breaking the alert here on Upstart, and then we'd pull back, and then we'd pop up and we'd pull back, and all day long this thing was alerting back and forth through that alert area here in the chart. So I'd watch that closely. With the bullishness that we have this morning, maybe that could give this some inspiration to pop on through. Might attract some buyers in here. We can see if we can push on through there to the upside. Keep an eye on that. XLY is doing good. We've got a nice little pop out here on XLY on that alert, pushing on up. I think you have a reason to believe with the bullish day that could continue to push on through to the upside, so I'd watch that closely. Adobe's still looking good here with this inverted head and shoulders pattern, looking pretty good overall. I'd keep an eye on that with that potential of that popping on through, maybe running up here to this major area of resistance, keeping in mind it's going to report on 3/13, so we've got plenty of time on that. TTWO continues to look good. Now, had a little volatility in there yesterday, whips on around like the rest of the market did, but we're holding this upside trend, and we're starting to break these resistance levels in the chart. I'd keep an eye on Take Two. Remember, they've got a new game apparently coming out that they're suggesting is going to sell like crazy, so watch that closely. Showing a lot of strength in that to the upside. Keep a close eye on that. Uber, I was watching Uber in here. In fact, we were doing some messing around in RWO with this, and doggone it, it just couldn't hold, just fell all apart here in Uber. It's got earnings coming up on 2/5, so I would stay away from it at the moment. Quite the recovery here yesterday, though. So if this holds in here, it may still be worth keeping an eye on. Those earnings could push that through to the upside. So watch carefully there on Uber. It's trying. Nothing wrong with that chart. As you guys know, I've talked about Ralph Lauren for a long time. This was that initial alert in here, popped, and we just continue to run here in Ralph Lauren. Moving to the upside, we continue to set nice little support areas in the chart. It's a very controlled upside rise, not a big whip in it. Nice little upside run, and I think every reason to believe that could continue to move on higher. Hey guys, some of the stocks coming up out of bottoms are kind of interesting to me, and I'm seeing some of these defensive sector stocks coming up. Now, when we start to see defensive sector stocks rotating back up, it makes me think about the fact that institutions are maybe doing the selling up here at the top and selling to retail, and they are rolling into these more defensive plays like Coca-Cola, and you can see breaking the downtrend, pushing here through to the upside. I think that's worth keeping an eye on anyway. PepsiCo making that push here to the upside. Possible inverted head and shoulders pattern maybe setting up there in PepsiCo, worth paying attention to. When it comes to bonds, take a look at TLT. Inverted head and shoulders pattern setting up there on TLT. If we are going to see those bond yields fall, then we should see bonds really start to move to the upside. TLT might be something to watch. Nice little resting consolidation in here. I think it's worth paying attention to if that were to pop on through to the upside. And you might even take a look at things like BND. BND, I don't know what's going on here in the pre-market here on BND. I think there's probably a bad tick in the system, but watch that carefully. There's that inverted head and shoulders pattern there on those bonds as well. So I'm running this video a little bit long. I want to, before I go, just echo that one more time to just be a little bit cautious. Don't be chasing an already extending stock, particularly into areas of resistance. I would be watching for the potential of whipsaws in the overall market, and that means that big pullback that could occur at any time after a gap up. If we hit some new record highs, fantastic, but still be prepared to watch for those whipsaws in the market if we run into any kind of bearishness or uncertainty, and one of the big ones being 25% tariffs on Canada and Mexico likely coming around first of the month. That's what the president has been saying, and I have to tell you, what he said in the campaign is exactly what he's doing. I think I'd take him at his word on those tariffs. So with that, everyone, be safe, have a great day, and a wonderful weekend. I'll see you right back here bright and early Monday morning. Wish you all the best.